The majority of people have heard about dollar cost averaging. That's the concept that you add to your investment as it goes down in price and you hold with diamond hands because you want large absolute return on investment. BORSOG is completely different. You buy at structural levels and sell at a targeted rate of return, turning over your same money again and again and again for very high annualized ROIs. In this video, I'm going to go through some of the differences between DCA and BORSOG. You'll find that when you have a knowledge of BORSOG, your entire profitability will turn around. Let's run the numbers. Welcome everyone to the Daily Show. Today we're going to focus on BORSOG, buy on red, sell on green. It's a market that's always profitable. Bull market, bear market, doesn't matter. The BORSOG market is the one to be in. The term BORSOG comes from Rule 621, buy on red, that's the BOR, sell on green, that's the SOG. Typically what occurs is people panic when they see red and they sell. Rule 127 is one that can save you. Smart money buys red, retail sells red. For example, when most people look at price action like this, they see the price coming down tremendously. They get totally freaked out. Smart money is completely different. They have X-ray vision. They know where the strong structure is inside the market, where prices will get caught through safety nets. They also understand when things aren't going the right direction and where the next level of buy pressure is. When retail looks at a chart like this, it gets really freaked out. After all, this thing is going to zero by the look of it, or is it? Smart money, because it has X-ray vision, can look at the structure inside the market and say, wow, we've got a lot of underpinning structural support through here. I'm going to lean in, not lean out. Smart money always has waiting buy orders inside the market. They understand what could happen up here if structural resistance is not breached, and what they can do in buying terms as price comes down. We can see for Bitcoin from this 39,200 mark up to around the $41,000 area. There's so much incredible buying support structurally. But retail simply does not know this. They look at exactly the same chart and they don't see what smart money sees. Rule 138 is really quite good here. All investors become traders every time they buy or sell. Smart money knows where the objective dynamic market structure is. It buys according to structure and it sells according to structure as well. Unfortunately, retail buys and sells based on fear. Fear of missing out and fear, uncertainty and doubt. If you haven't had the opportunity yet, I suggest you watch the film Dumb Money. This shows retail investors to their core. Many people take their life savings and just trust it to what they hear on social media. They don't put in the time, but they certainly put in the time to make the money. Dumb Money is the breakdown of the GME play, and it's really fascinating. Many investors will just look to Roaring Kitty to guide them. Do I buy? Do I sell? What do I do? You need to be able to answer that question yourself. If you can, you're smart money. When people first get into financial markets, they're chasing big absolute return on investments. Smart money is completely different. They don't focus on the absolute return on investment. They focus on gross annualized ROI. They're seeking to turn over small percentages often. Yesterday, when we had that big collapse in price, when I looked at Doge, I was buying at structural levels and I've already turned over several positions in excess of 166.5 million % annualized return. This requires us to do BORSOG. Buying on red means that we have buy orders waiting inside the market. Rule 7 is really powerful here. Buying creates profits. For example, if we look at Solana, each one of these little red arrows is a sell. Each one of these little green arrows is a buy. If you bought up here with Solana, and you might notice that I wasn't participating very much in scaling into Solana when it was going parabolic. I was waiting for this pullback. I was waiting for price to weaken, and it did weaken, and already some sells here. But the concept is, if I bought up here, I would be 17% below water down here as a comparative basis. How did I figure out not to buy up here? If you're liking the content so far, please smash that like button, and if you're new, a very warm welcome, and don't forget to subscribe and hit that notification icon. I do my analysis of the Tier 1, Tier 2 and Tier 3 charts from a structural level each and every day. The markets were getting quite overextended. The concept of selling on green, buying on red, selling on green, you can see it playing out here. And this was what I was anticipating, a pullback at least to this particular level. When we look at a Litecoin trade since around the start of December, you can see that there's so many opportunities to buy when the price comes down, and so many opportunities to sell when the price goes up. It might be a little bit hard to see, but there were already a couple of sells on Litecoin, just from this big capitulation down and the retracement. BORSOG is unlike anything you'll see anywhere else. It was created by the CTKS community. BORSOG is incredibly powerful. You buy when everybody is fleeing, and you sell when everybody's FOMOing in. This is on Bitcoin Cash. I'll just zoom in a little bit closer to this price action. You can see here that there were 5 sells in there, and they were incredible annualized return on investments, much higher than that 166 million. To buy and sell effectively, you need to understand Rule 45. No alt can escape Bitcoin's gravity. We saw Bitcoin coming down, total coming down. This dragged Ethereum, Solana, ADA, Doge, XRP, Litecoin, Bitcoin Cash with it. But we've seen some resilience inside BNB. BNB has had a lot of positive net cash inflows in the past 24 hours. Across the crypto market, we've seen in excess of $500 million worth of liquidations, the vast majority of which were long. So many narratives fly around every single financial market. Please don't get caught up with them. Just look towards structure. If you're leaning into the red with knowledge, you are already a professional. A big thank you to everybody for your very kind birthday wishes. We have such an amazing global family. Kate and I are so grateful to share this time together. Thank you again, everyone. I only trade and invest in crypto, but I know the rules of financial markets. One of them is Rule 225. Bitcoin cannot escape the stock market's gravity. How the stock market moves is incredibly important to all other markets, including the bond market. Looking at the heat map, you would think that the stock market was looking really bad, and Apple and Tesla, Nvidia all came down. When we look at the fear and greed index of the stock market, it's improved slightly. Crypto has basically flatlined. But one thing we did see, the S&P 500 and the Nasdaq are retaining their positive forward momentum. With smart money, X-ray vision, we just pop on the indicator, and what do we see? The S&P 500 on a daily basis has cleared all of this structural resistance. This is incredibly powerful. A lot of people will say, oh no Ken, we're coming into late stage expansion, early contraction, we need to run for the hills. You don't. If you BORSOG, you have no problem in any market. BORSOG applies to every single chart that you could ever trade. And when we look at sentiment, it's becoming increasingly bearish, but we notice the structure of the S&P 500. The S&P 500 and the major indices are all impacted by Forex currencies, especially the DXY, as well as the yields. We can see that the yields and the DXY are under positive momentum at the current time. The inverse pairs, the inverse Forex pairs, are under negative price momentum. This means that the DXY has been strengthening, and it's been putting negative price momentum on the stock market and crypto. We can also see gold has been under negative momentum. the negative momentum of silver is starting to get alleviated. This is most likely due to junk bonds starting to recover, and junk bonds is a really good indicator of risk off and risk on activity. We are getting a couple of conflicting signals inside the markets at the moment. But one signal that's really important is the probability of a Fed rate hike. It was 2.9% one day ago, it's 1.6% today. Even if you're crypto only, you must do this kind of analysis or you won't know where things are going. The reason I stopped buying is I saw the yields were starting to recover and the DXY was starting to gain strength. I knew I would have the capability of buying on red. So I just paused and waited for it. Many thanks to the kind generosity of Digital D, Arjan, Crypto Turtle, and someone you know. It's rule 446 that's our savior here. All markets are intercorrelated and interdependent. That means all charts are as well. If you're looking at Bitcoin without a knowledge of the DXY or the US 2-year or the US 10-year, junk bonds, gold and silver, you're making a huge mistake. We also need to keep high economic impact events on our radar, and you can pop across to ctksnews.com to find those. This week is absolutely full of them. Inflation rate, core inflation rate, CPI, PPI, core PPI, FOMC predictions, the Fed press conference. Ay caramba! It's going to be really volatile inside the markets, but that volatility is a good friend for us. That upcoming volatility was also a reason I stopped scaling into ADA. You can see here that ADA decreased 21% from that peak, and there's already been 3 sells there with an annualized return on investment in excess of 166.5 percentage points. And not only that, a couple of purchases down here have already been sold again. People who invest in ADA, that's a very fair thing to do, but if you do an investment bag and a trading bag, wow, you're just going to rock and roll, especially if you're borsogging your way to profitability. There's only a conceptual difference between investors and traders. Investors buy and sell, traders buy and sell. There is no difference. But Ken, the tax office says there's a difference. Okay, fair enough, the tax department says that. But when it comes to actually buying and selling, there is no difference. Except for the fact that investors tend to buy horrendously and they tend to sell even worse. But they have an absolute superpower when it comes to letting their investment grow over time. Traders are very bad at that. They don't have diamond hands, they have a diamond mind. And they get in through timing and they get out through timing. Combining the best of the investor mindset with the trader mindset, that's what you want to be doing. When getting into trading for the first time, people experience high levels of fear and low levels of confidence. That's simply because they haven't practiced. It doesn't matter what you do, practice is the lifeblood of skill and competency in every profession, in every hobby as well. You'll grow in confidence as you practice more and more and more. What typically happens, people get into the markets and they want to get rich. They want to drive those Lamborghinis and they want to do so tomorrow. And they feel this way because they usually come in on a lot of hype. That hype is the worst time to buy and best time to sell. That's why inside our community we go long at spot. We do not use leverage, but if you want to use leverage and you know what you're doing, that's okay, but so long as you're an expert at spot. Some people are expert at spot and they still don't use leverage, so just be aware of that. When people first start their trading and investing journey, they take up huge amounts of leverage and they end up blowing up their accounts because they simply don't know what they're doing. They don't know the interdependencies, they don't know how things relate, and they don't know the rules of the market. They don't know the structural support and resistance levels. They don't know the difference between Tier 1, Tier 2, and Tier 3. They use recent indicative price and story-based analysis. They go on YouTube and they say, oh, I've looked at some free content, I know what I'm doing. And you can just think about it like this. all of these drivers pass their driving license, but they're not parking very well, are they? The thing to understand, a lot of YouTubers out there actually park their cars like this. I don't mean literally. If they're talking about trading and investing, a lot of them don't know what they're doing. They're just learning. It's very important that you follow people who know what they're doing and who can prove it. Experience really, really matters. Inside the crypto market, you will see exponential price behavior. You'll see the red and the greens exploding. The greens explode upwards, the reds explode downwards. But BORSOG can make money from anything. You probably figured out that BORSOG is not dollar cost averaging. It's not DCA. Rule 621, we buy on red. We set our targets for high annualized return on investment, and we set the targets sensibly based on structure. For example, when you look at BNB, I was saying the other day, I'm accumulating BNB because it's looking really, really strong. I was into the timing of BNB. Traders are very, very powerful at timing. Investors are powerful at diamond hands. But you can see here that even though I bought this spike down, I've already sold everything. And we're talking very large annualized return on investments there. I have two secret weapons that I use. The first and most important one are the structural levels of the Tier 1, Tier 2 and Tier 3 charts. Underneath every single one of these charts, for example the S&P 500, which we looked at before, there's a trading view indicator, and if you pop across to ctksmethod.org you can pick that up. But you also get all the other ones included. Another secret weapon that I use is the market timing cheat sheet. I'm continuously looking at how the crypto market is impacted by the stock market and the macroeconomic factors. This allows me to pause when I need to, and it allows me to get in when it's looking good. Many people get into financial markets because of what they want to accomplish in life. Over time, we find out, especially when we're successful, it's not about what you get in life, it's about who you become. Becoming more of a financial and emotional blessing to yourself and those you love. That's the key spice of life. As a global family, we do that through positive excellence. We focus on kindness to ourselves and others. This allows us to learn. Learning is the only way across from Zone 1 and Zone 2 into Zone 3 and Zone 4. Not surprisingly, learning makes us smart. When people refer to dumb money, they're not actually being derogative, they're just saying these people don't know. The way to become smart is to learn. Make sure you're learning from the right people. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.